I always wait for when it gets all red and hot and bothered. Anyway, it's time for Neil's Spiel. Tonight, more like Neil's plea, although it doesn't rhyme. Some advice for the President of the United States, as if cease and desist. Stop with all of this new help for housing. Stop offering more mortgage reworks, more rescues for those underwater. Sir, this goes to you, Mr. President. All the government help in the world won't make these guys whole, or it would have done so by now. Focus instead, Mr. President, not on what the government can do, but what the markets are already doing. They are giving you a housing present, Mr. President. You don't even see it. Those in arrears in their mortgage or underwater in their mortgage is down to 10% today. Interest rates tumbling to new lows. 30-year fixed-rate mortgages, look at that, well under 3.8%. 3.8%. My God, that's almost what my wife and I were paying a day when we got our first mortgage back in the 1980s. Now, I exaggerate, but to make a very simple point, housing is adjusting accordingly to market forces, supply and demand forces, and overall economic forces that have much more to do with folks getting jobs than being handed another federal program that proves just a piece of work. Rates are low, appraisals are finally getting real, and once nervous sellers, well, they're getting, well, a little less nervous. That's because fewer are underwater, as I said. Now, not all, and certainly not enough to turn things around overnight, but enough, and in enough regions, to make realtors certainly take note, and buyers certainly take notice. The ebb and flow of economic swings did that, not the ebb and flow of government programs. Because those kind of programs come and go. What's going on with these rates and the underlying economy is having a little bit more permanence to it. Now, I'm taking a leap here, but I think this is real, what's going on. Not real great, but not real recession either. Not off to the races, but as I said many times, certainly off the mat. So take note, Mr. President, and put the executive order pen down. All will be right if you just put a cap on that pen and stop doing the stuff that's made this housing recovery take so long. Stop, think, don't do. The recovery is here if you just stay out of the way and let it take hold. Then you can take the credit. You're off to the races. You're in the history books. Enough said. Mortgage expert David Lykken says this is the kind of stuff that led us into the housing crisis in the first place. David, it's always great to have you because I'm going to defer to your expertise. I'm just all, opinionated and all that. But my view on this is the less government does, the better. The more market forces take over, the better. What say you?
Absolutely. Market forces will correct this. They are correcting, as you pointed out. Interest rates are at the lowest levels they've been at for a long time. We do have good credit boxes right now. The problem is, if there is any government intervention, is they put in a quote-unquote solution to fix this housing problem, and it's got lenders so afraid to lend, Neil, that's
is that
the problem.
Right? That they're concerned that the government is going to throw something at them, so the better part of valor is to stand back?
I'm here at a client in Sacramento. I'm working with one of them. They heard me going on. They said, tell them to, if anything, back off the tack dogs from on this industry. It's not the problem that we have a too tight credit box, Neil. What this FMIP premium or the mortgage insurance premium, what he's doing here, that's fine. That's actually going to go either put more money in people's pockets.
No, he wants
or
to cut that so that you're not paying an exorbitant amount on mortgage insurance, right?
But here's his speech. In his speech, he says this will allow consumers to save more money. This will be allowing consumers to use these extra monies up to whatever the amount is on a year that he quoted, is going to use it. Here's the problem. The fallacy, I'm all for this particular move. However, here's the fallacy. We've got to have financial literacy training. I'm trying to get that out. Not doing such a good job. But we need to get that in America, because what people are going to do with this extra money they're quote unquote supposed to save is going to go into getting a bigger mortgage, and that starts this cycle. Now, if we just do that, that's fine. Here's the problem. We've got to go address one government issue that's still going on. If he's going to do anything, get the tack dogs, the regulators off mortgage bankers so they can lend safely and securely within the existing credit box. Don't mess with the credit box.
Well, I always think, too, the same lenders who were ripped for willy-nilly lending to anyone and everyone during the boom, then they learned they would be ripped a new one when they stopped lending or they chilled on that. It's like the government's playing the role of Sybil here. No one knows what its position is, and the banks, who I'm hardly an apologist for, but just say, we don't know which end is up with you, and we'd rather you just tell us a skinny yay or nay, but in the meantime, we're not going to do a thing.
You're darned if you do, or you're darned if you don't. Just give clear guidance. If there's anything we need out of this administration, is clear guidance, not expanding government programs, not enticing quote-unquote lenders to lend more.
It just drags it out. It just drags it out.
Exactly
David.
right.
You know, you might have
Your
a future.
point
David, you might have a future at this housing thing. Keep at it. I think you look very promising. Very good seeing you, my friend. Thank you very, very much. Happy New Year to you.
Happy New Year to you.
David Lykken. Well.